Tesla's down again today, but we are holding on by a thread with this expansion. You can see that for Tesla, the past 6 times that we have been showing an expansion on the BX, which is indicated by green on the indicator at the bottom of your screen, while we're within a bullish trend, meaning that price is continuing to make higher lows and higher highs, we have broke out or expanded each and every single time. I removed my aggressive bullish stance on Tesla back at the end of December because you can see the BX was no longer expanding and actually turned red. You can see that all of these other times that the BX turned red, in most cases, it just consolidates. That's why we thought that price was going to continue to make lower highs and lower lows back to worst case $350. But something last week changed. That was when the BX flipped from red to green, initiating the potential next expansion, which would be into equal highs around $490 to $500. While that daily BX is still green, you're going to see that I've actually turned on a weekly BX, which is going to be a bigger time frame at the bottom now, and that is actually showing lower highs and unfortunately right now, lower lows. So how this closes specifically heading into Friday is very important. If we were to close like this on the weekly chart with lower lows or dark red, that would also mean that the daily chart is going to close with red as well. And unfortunately, in that case, I think there would be a very good chance that price would sell its way back off to that worst case low that we spoke about a couple of weeks ago. And that would give us about a loss on this setup of about 4%, which is not the end of the world, especially since the last 6 times that this happened, we had peaks of about a 20 to 30% rally. Now, at the time, I don't have shares or calls on Tesla. I actually don't have a position open at all at this point. I've been selling cash secured puts on this, and I was very close to opening calls today simply because the BX is still green and the risk versus reward is very, very high at this point. But I decided that I'm going to hold off until this Friday. If we look at Tesla alone over the past couple of years, we've made over $1.6 million predominantly from that rally over the past 6 months. And so I don't have to go ahead and give back all of that profits just because I want to continue to play Tesla here. My goal, especially now that we're heading into tax season, is to pay the massive tax bill that I'm going to have, and then take a portion of that and focus on selling cash secured puts. Because my theory is that you should not have to get rich twice. My goal at this point is to continue to remain macro or longer term bullish on Tesla, but focus on selling cash secured puts into earnings, maybe down to $350, so that worst case scenario, if price pulls back, I get a very, very good entry point. And if price were to break $350 to $325, then we would have a bigger worry on our hands, but I will deal with that when it comes. I can't control the market. I can't control Tesla. All I can do is look at our indicators and then decide how aggressive or conservative my actions are from that point on. And while I am definitely taking a more aggressive approach in the market, much like I was back in the summer, I'm still down about $77,000 this month alone. And so, as I said, there's nothing to force. We'll see what ends up happening. And hopefully, Tesla can continue this expansion and break out to $490 after earnings. Nvidia closing the day flat, and even though price sold off, the BX is closing green once again, and it seems that this expansion is going to continue. We've been watching this setup as well as semiconductors for about a month and a half now. We were watching price compress back here from November all the way to the end of January, and we were not biting on many of these false breakouts here. One, because we knew that price was going to continue to make lower highs and higher lows. But the main reason is because if we look at the weekly BX, which I just overlaid at the bottom of your screen, you're going to notice that the BX was showing dark red the entire time except for one pop here in January, which we did take a small loss on. But now that that weekly BX is showing light red, which is higher lows, indicating that the bottom is in on the bigger time frame, this means that any time that we get a potential expansion, we can chase it. And so that's what's been happening here on Nvidia. Now, I don't have a position open at this point, unfortunately, because I've been focusing a lot on ASML as well as AMD, but this thing is looking very, very good. You can see the last time that we had a breakout from this expansion here, price ran about 14%. And at this point, we're actually already up about 7%. As long as the BX holds green, price should continue to expand its way up to maybe $155 to max $160 before we see another consolidation. And if I was long on this and got in anywhere between 135 to 140, then I would just continue to keep my eye on the BX, maybe take some of my profits off the table when we hit an equal high at $153, and then let the rest continue to run by monitoring the buy sell pressure on the BX trender. As of right now, Nvidia is looking very good, and I think that price action is going to continue to move its way up in the coming weeks and months. Google is heading into earnings, and you can see that price is making equal highs, which I have this horizontal trend line, but it's also making higher lows. It's called a bullish ascending triangle or a bullish compression. And in most cases, when price is compressing for multiple weeks, and then the BX trender, which is that green and red indicator at the bottom of your screen, flips green, this is normally our time that we can look to enter long. Back here, we would have had a 10% run, a 10% run, and then a 13% run prior, and then a 13% run after that. Price has been compressing and compressing, and now that we have green on the BX, it looks like this could be the beginning of a potential expansion or breakout up to $210 and $220. The main elephant in the room at this point is going to be earnings coming up on February 4th. Just looking at the buy-sell pressure, especially on the bigger time frame, you'll see the weekly BX I just put at the bottom of the screen. It seems that enough buyers are still coming in to hold it bright green and continue to show higher highs, which is an even better indication that this massive cup and handle is going to break out. And so I think that over the next 60 to 90 days, Google will be trading at least at $220, potentially $230. I learned how to set up my indicators as well as get the exact checklist that I use in order to enter and exit my trades completely for free. Our Elite Traders Playbook course is going to be down in the description.